Hi friends. So if you are looking for undervalued stocks, then what happens in the market is usually people run away from the market when the stock gets undervalued. And when it gets very high, then people rush to it, and that is the root cause of losses in the stock market. Over here on this channel, if you want serious knowledge where you can find the good undervalued stocks for the long-term wealth creation, this is the channel for you. But if you are in entertainment seeking mode, please try somewhere else. Thank you very much. This, if you are a serious investor, this channel is going to be very valuable for you. Let's begin today's analysis of TCS, the India's largest IT company's quarterly results. Let's decode them and let's see if there is a value unlocking happening in this company, and what are the pros, what are the cons, why you should consider, why you should not consider. Everything will be covered within this one video. Just make sure that you watch it till end. So let's start TCS quarterly results analysis on Sagarnomics. So before we proceed to analyze the different aspects of business and fundamental technicals of TCS, I just urge you to click the like button, because later on you will forget about it. And second, that if you are new to my channel, please make sure that you subscribe and hit the bell icon, so my next research based video does not get missed from you. So let's begin with the fundamentals first. So over here on your screen you can simply see TCS, and I'll be starting with the first thing is, you know, the company, what does the company do, but I'll just first start with the credit rating agencies report. So it is on 10th September. This company's report, the credit rating agency ICRA has said that it is A plus rated company. So for long term and the short term borrowings, it has given a triple A rating. So it is the best rating which a company can get, right? So company fundamentally is very strong. There is absolutely no doubt about it. What are the credit rating, the drivers by which the company gets the best credit rating? The reason is, the main strength of the company is that it is the largest Indian company in global IT service outsourcing, remain competitive, and it given its access to large technical talent pool and cost advantage in India. So friends, you can simply see second largest company of India with 15 lakh crore rupees market cap. It is whooping. It is really too big, because only Reliance is ahead of that. So this company is financially very strong, very big company. Now, so that is the first strength. That, and second, it has a very vast large talent pool, because I have seen so many people, software engineers. I find that out of 3-4 software engineers, you will find one in TCS easily. Now it gives full service, it has full service capability with rising share of digital business. That simply means, see, there are companies who makes only the softwares, so just like product selling, but the problem is that the companies which covers the entire value chain makes the long-term growth. So this company TCS completely give a complete solution to its clients, in especially in US and other countries, where from start to end they take care of the client's business, especially technological side, not the business of commercial side, right? Now customers are repeating business with it, so there is again a plus point. Robust financial profile, so absolutely lot of money is there, liquidity is super, so no problem. Challenges, now what are the challenges? Challenges are that this company is in such a macroeconomic environment where lot of headwinds are going on. So simply, just like Middle East war situation is there, plus the discretionary spend by the companies in United States, that has been compromised for quite some time, and that is the biggest reason why the Fed has cut the rates by 0.5 basis points in the last few days back only. So that is the thing. Now let's talk about the company's basic fundamentals. So over here you can simply see TCS. So TCS is 15,000 crore, 15 lakh crore market cap company. 4,000 rupees is the stock price, approximately plus minus. It keeps on changing when you watch this video. Next, dividend yield is very good. So 1.33% dividend. That means it is giving dividend to its shareholders, and it is very honest, transparent, and very reliable company for the shareholders. Return on capital employed is 64%. But is it impressive? Absolutely. It's absolutely impressive because this type of ROCE is very rare, but for the investors like us, the ROE matters most, and we can see that 51% ROE, return on equity, is again a very good number. Dividend is given 57.56%. That simply means company, if it earns 100 rupees, more than 50 rupees, it gives you as a dividend as a investor. Now, Petrovsky score 7 is impressive, absolutely. And secondly, ROIC is 83. So, numbers wise, there is no problem, absolutely. But what is the problematic thing? The problematic thing is over here. So, here you simply see the latest results of TCS, this quarterly results. So, you simply see that this company on year basis. So, if I take September 2023 and compare it with September 2024, you say that you see that 59,000 crore rupees was the revenue. Now it is only 64,000 crore rupees. That is a growth of only 8%. So if you park your money in a FD or maybe in a liquid mutual fund, you will find that you can get a better return over there or maybe equivalent. But that's not the case. The case becomes a little more severe when you look at the net profit data. So net profit has grown just by 5%. So why would you risk your money? I'm talking about the investors. Why would they risk their money in a company which is giving 5% return? Rather, they will park the same money in bank FD, auto swapping FD or kind of that, where there is a capital of safety and they can withdraw the money at any time, or maybe they can park in a good mutual fund. There they can get minimum 2 to 3x of return of this, right? So that is that shows that the company's results are not up to the mark, and the result of that you have seen in the stock price correction, right? So EPS is, again, you can see simply that it has also slipped at, I mean, it is just 6% growth, 31 rupees to 32.9 rupees. So nothing very impressive. But is it the company, the company, has it become undervalued? Let's check it out. So let's compare it with what? With Infosys. So look at the Infosys numbers. Infosys size wise, it's half of the size. I mean, 15 lakh crore is the TCS and 8 lakh crore is the size or market cap of Infosys. A very small company. No, not in that sense, but as compared to this giant. Next, P is almost same, nothing different. Next, coming to this, and I don't pay too much of attention on price. I pay attention towards value. So let's move to this side. So over here you see return on capital employed. TCS has delivered very impressive numbers as compared to Infosys. Over here, ROE wise also the same picture is here. When Infosys is delivering only 31.8% return on equity for people like you and me or all the retail investors, that is the one of the most important factor. Second, let's talk about TCS. It is delivering 51.5%, which is way too high, right? And but the only thing is that these are trailing data. I mean, these are the old data. We will be seeing the same numbers happening in future. This is not sure. It depends on company's business outlook in future. Now, I'll just bring your attention towards a little bit more important thing, that PEG ratio wise, both the companies have a higher PEG ratio. That makes them a little expensive. But if you look at the business scenario, they are now undervalued overall. Debt free, both of the companies, 0.09 debt equity, over here 0.1. So nothing to worry about that. Both the companies are having promoter holding. In TCS, promoter holding is 71.8. And see, this is a good thing about the Tata Group. And Sri late Ratan Tata ji has actually developed a culture in the company. Now, I wish for his, post life, his soul rest in peace. He was the greatest of the great business leader which India has ever seen. May he rest in peace. But look at over here, the point I was referring. Promoter holding in TCS is 71.8%. While in Infosys it is 14%. That means the company's promoter do not have control on business, but over here they have full control. That is very important. So other numbers, I think that will become very long video. So let's move to the next part. So here you see the latest presentation by TCS. So you simply see the focus of the company is on AI for AI solution engineering. So now this is a very, AI for AI solutions. So this is a very important thing. Companies considering the future is AI, and it is working very advanced, very highly focused work is being done by the company in AI field. Now where it is doing? It is doing in almost all the part. The best part I'll just show you over here is that AI for software engineering. Now, why it is important? It's important because when, see, software is all about coding and RBDMS, relationship diagrams, and all those, coding stuff basically. What this company is doing, it is using AI in coding and software engineering. That simply means that for designing a software, it can save time by using the by taking the help of artificial intelligence. That simply means smaller turnaround time. That simply means better sales, better project delivery, and better profitability and better market share. So this is the innovative idea that the company has implemented. So I hope this has helped you get a little clarity about the company. Now rest of the numbers are also very important, impressive. Now let's look at the technical chart of the company. And before that, I'll just show you the industry-wise comparison also. So look at here. You see over here, the important thing is that sales and margin. If you see, then the profit margin have gone a little down. Though, as you can simply see that the quarterly sales are growing. Sales are growing very nicely, though it is not as sharply growing as earlier. But profit, this yellow color, green color line there, profit marks, NPM, this GPM, gross profit margin, operating profit margin, net profit margin, there is a pressure which we have seen in the numbers also. Now, if you look and compare it with the industry, you will find that return on capital is way too good for TCS as compared to the entire industry. It gets the highest ROE and highest ROC. So maybe stock's price is corrected, but you can simply expect the company to perform well in coming days. There is no guarantee, and this video is only educational video. No buying selling recommendation from our side. So, but I'm just giving you an insight. Now, look at here. You can simply see that the margins have grown this quarter. They have gone a little bit down, and the overall that the company's effect, the business has not grown that much. EPS is also compromised a little bit. Right, so let's talk about its technical chart, because otherwise if I keep on analyzing, the video will take the whole day. Anyway, so this is technical chart you are seeing on your screen. But before moving to the technical analysis, I just want to I want your attention towards a key important thing. Let's see. There are two types of people who have commented on my videos. One are those who lack the basic knowledge of the stock market investing and finding the great stock. So I have a good news for that. Secondly, there are people who want updates and detailed analysis of the stocks, right? So if you want the updates as well as the stock of the month, where I'll discuss the all the aspects of stock analysis, we will take a fundamental and fundamentally strong stock every month, and we'll analyze it thoroughly. So if you consider that, then joining my membership is absolutely very, very helpful. It has helped so many people. So link you will get in the description and pinned comment. Second thing, so if you want to learn how to find stocks, the great stocks in 10 minutes or less time, I'm saying 10 minutes or less time, then you should try joining our masterclass of stock selection. I'll just give you a little overview of that quickly without taking much of the time. Just give me a moment, please. So what does it say is that my team's mission is to make the things very, very powerful and easy for you. So there is a completely scientifically designed stock selection masterclass for you. The best part is that this is the world's fastest way to find great stocks, and I say it with whole responsibility. Right? I guarantee you that you will find the greatest stocks within 10 minutes using my techniques, using Boolean logic and so many kind of screening, filtering and every type of thing. If you are truly excited, then try joining that. If you want to save your maximum 90% time in stock selection, and if you want the most diversified portfolio developed in 30 minutes, then try this masterclass. This will really, really help you. So you see we are in the bull run for multi-decades. So if you want to take full advantage of this, then you must find the great stocks for long-term wealth growth. So if you want to create a powerful stock portfolio, if you want to create wealth with that, and if it is important for you, what did I say? If it is really important for you, not a job for you, then try subscribing to my stock selection class, where you will find within 10-15 minutes best stocks kaise nikalna, how to find 50 plus ready to use Boolean queries. I will share it with you. 200 plus screener financial ratios and 10-minute how to do technical analysis, plus 5,500 100 rupees of amazing bonuses free for you. So try that. The description and pinned comment has the link for both of those. With that, let's move to the second part, that is the technical analysis of the stock that we were considering, TCS. So over here you see TCS chart. Now in TCS chart you simply see it's a monthly chart. So you see it's a significantly consistent growth, right? So from I think 2012 or something, it is growing. 2009 when the entire market got collapsed, it has consistently growing at a rate of say 10% or so. But if you are want to look at the daily basis, you'll find that the stock has corrected a bit and it has created a kind of break and handle this pattern. But the problem is that it did not break out over here. When it does not break out, that simply means that the pattern fails, and after that you see once the pattern fails, then it simply goes collapsing because of the results and news and everything, and the RSI has gone so down, it is below 30. So that makes the stock as undervalued. What are the signals over here? You simply see that the company needs some kind of positive movement, positive news, or any kind of positive development will start the price rise for the company, because it is already have gone very low. So 4,000 to next level you will find is around 4,500. If it breaks this, then it can go to 5,500 to 6,000 in the medium term, right? So that is the small technical analysis of the stock. I hope you might have got some idea about that. So how did you find this video? I am ready to improve my videos for you to get maximum value, but for that you have to comment in and let me know how did you find it, and if you have a particular query about the stocks, please let me know in the comment. Also friends, don't forget to subscribe to this channel, because otherwise it will be very difficult for you to find me again, because I am not a very big YouTuber or kind of thing. I am just a stock researcher. So make sure that you subscribe the channel and hit the bell icon. And also, if you find the video 1% useful, please make sure that you like the video and share with all the friends on WhatsApp, Telegram, Facebook, everywhere, because people shared and they have shared their comment also. That's why I have shared. So I thank all of them, and I hope you will also do that. So with that, let's wrap up this video for today, and we will meet in the next video with a deeper analysis of some more stocks. Till then, take care, be profitable, and Jai Hind.